Hey everybody, Chuck Barone. Friday, January the 27th, 2023. Wrapping up a crazy week, a crazy month. It's all just nutso. Although we got some pretty decent data today to talk about. A nice finish to the week. Things are not looking like the catastrophe. It's funny how it works, man. It really is. But anyway, we'll get all into all that during the show. As always, before we start the show, I just want to welcome everybody to the show. Thank you guys for your support. You guys watching these videos, your comments and questions means the world to us, guys. We really appreciate it. Markets today to finish the week. Well, we had big data today, which we're going to talk about a little bit of detail. But the data was good for the market. So the stocks rallied today. Actually, we're up above 34,000 on the Dow before declining, still finishing with a small gain. And that kind of was the tone for the market today. A little bit choppy. I think that there's some profit taking going on right now. There's some jitters in the market because some companies came with earnings that were not super awesome. So now that, of course, everything, since there's not a lot of certainty in the market, everything is leading to speculation. Everybody's projecting everything forward, and it's just friggin' chaos is what it is. But the market finishing the week up. NASDAQ's been really rallying nice because that thing was cratering for a while. So it's nice to see stocks rebounding, people breathing a little bit of a sigh of relief. Hopefully, when you're looking at your statement for your 401k or your investments, it's not as horrifying as it was. And looks like things won't be so bad going forward. We'll see. Bonds today, the bond market prices down with yields up. Not much happening today in the bond market. The 10-year sitting at 3.52%, up just 2 basis points. The 2-year sitting at 4.20, also up 2 basis points. Quiet day in the bond market. I think everybody's waiting to see what's going to happen next week. We know it's a huge week with the open market committee meeting and all the data coming. So I think the bond market's just kind of like holding its breath, waiting to see what's going to happen. Dollar today on data, up small, but getting close to getting back above 102 on the index, 101.94. Not a super strong number for the dollar, but not a terrible number. I think that the dollar, we'll see how things look for the dollar next week. We know we're going to get a rate increase. The market's priced in a quarter. I'm thinking that's probably what we'll get, but there could be a surprise in store. So we'll see how this market goes, up or down. We'll see. I think rates, even though they're higher than they were, are still pretty good rates. I mean, let's face it. I've talked to a friend today, actually, a viewer responding that he's getting 4% on his money market at Vanguard right now. So it's pretty cool seeing people who save money being rewarded for it and finally starting to get a little bit of interest on their savings. Oil today down small, $1.57 down, but breaking under support at $80, $79.44. It's in that trough, guys. It's just going to be there. I think there's some doubts about demand. There's some questions about China's economy. I don't really know how much China's going to factor into world oil prices because we know they're buying oil at a discount from their friend in Russia. So that's a fascinating market. I saw gas rebounded today, back up over $3, only down 66% or more. But oil and gas, a very volatile market right now, not a lot of certainty. The world is as we all know, the world and fits and starts is transitioning away from these fossil fuels, and it creates a lot of volatility, and especially in this market where there's so much uncertainty everywhere, a lot of volatility. Metals today, finishing the week with a small down day. Gold down at $1.90 per ounce, $1,928. Still a great price for gold, man. I mean, nothing goes straight up. So a little bit of a breather like this, not a bad thing, especially with such a small decline. Silver declining 35 cents today, $23.56 per ounce. A pretty good price for silver there too. It's going to be interesting as these metals, gold and silver, start approaching resistance to see how easily or tough it is for them to get through those numbers. Silver's going to probably have some major resistance going through 24 and even more at 25. Gold went through 18 and 1900 like it was standing, like it wasn't even there. We'll see how things fare now between here and 2,000 per ounce. Bitcoin today up 132 bucks. Last I saw, 23,157 hold its own. A nice rally in Bitcoin continuing, not quite as fast, but still hold its own with these prices. So there's obviously demand for Bitcoin and cryptos. Nice to see the people here who are viewers of the show holding these cryptos, you know, recouping some losses because it was looking pretty bleak there for a bit. News you guys need today to finish this week, just a couple of little housekeeping things. They released the PCE today, which is the Federal Reserve's preferred inflation gauge. They like this one more than they like the CPI, coming in with numbers that were not terrible. Top line inflation year over year for December, 5%. That's down from 5.5% in November. Core numbers, 4.4%, down from 4.7%. So, as all of the other indicators have shown, you know, inflation, the pace of inflation is slowing down. Inflation is still here. 5% is great compared to 9%, not so great compared to their target of 2%. So we'll see how long, you know, if this inflation continues its downtrend for how long, if there's any glitches or, you know, spikes that could happen. And of course, policy is going to dictate a lot of this stuff. We'll see if the Fed and, you know, our friend St. Jerome has the stones to keep the pressure on until this inflation is really done away with. And I'll let you know when I see the price of butter and eggs coming down. Even though I know a lot of this is greedflation, especially with the egg guys, but the price is still outrageous for that stuff. So I'll be looking for that to come down. Although I got to admit, I was celebrating yesterday. I did get to, you know, my car is a car that has to have premium fuel, which sucks. But I did pay yesterday under $4 per gallon for the first time in a while. So that was kind of a nice relief. So prices are coming down. Real estate prices leading the parade. Down here in Vegas, you know, close to 70 grand per unit on the median price at least. So prices coming down, the Fed doing its job. The market, of course, you know, now we'll see how the market reacts to it. Obviously, the market wants the Fed to start cutting rates. I really don't foresee that coming at all. I think we're going to be looking at, you know, we know next week is a huge week, right? We know the Federal Open Market Committee meets. Jerome will be out there. Chairman Powell will be out there on Wednesday. That's when they'll make their announcement. Market pricing at 1/4 point. That's what I believe we'll get is another quarter. That'll bring the rate up to 4.60%, because I'm factoring it around 4.35 right now. So a quarter next week gets it to 4.60. Another quarter in March gets it to 4.85. That's where now Wall Street is saying there will be the pause. So they're guessing the Fed now is no longer going to break that 5% threshold. Apparently they're believing they don't need to with these inflation numbers coming down. I, however, still believe we're going to get another quarter somewhere. I think we're going to get Fed funds rate over 5% sometime this year. You know, having lived through the last big inflation, even though I was young, you know, I remember the fight. And if you let off on the brake too soon, the inflation just picks up speed, comes roaring right back in bigger numbers, and the Fed ultimately then has to raise rates even higher than they would have to fight those numbers back down. I hope that the Federal Reserve has learned the lessons from those painful years in the late 70s into the 80s. You know, they're going to get some political pressure, especially as the economy weakens here. It's going to be interesting to see if they have the balls to finish the job. These are the reports we're looking today. Consumer spending, not so great numbers here, guys. They were expected to get to decline month over month in December, down 0.1%. It came in down 0.2, doubling the expectations. They also revised November's numbers down on spending from a positive 0.1% month over month to a negative 0.1%. So it's showing the consumer spending slowing down. That slowdown accelerating into December, which is usually a spend it up kind of month with Christmas there. So now that's, of course, adding a little bit of worry about the economy. As we know, the consumer spending is the driver of our economy, about 70% of the U.S. economy now. So any little hiccup with consumer spending starts everybody freaking out. So the market, of course, interpreting this as another sign that the Fed will ease up on these interest rate increases. I'm not so sure that's the way it's going to break down. I think consumer spending might have slowed down a little bit because a lot of that spending has been debt driven. You know, consumers borrowing more money to spend, and even the most reckless spender knows he can't just continue to borrow money and spend it forever. So a little bit of a pause in that kind of activity, not surprising. I want to see the consumer debt numbers now to show us if those numbers, consumer debt is going down, we can see that then driving consumer spending down, right? Also today we got consumer income continuing to rise. Numbers are, I mean, that's putting the big pressure on this inflation. We've talked about it on the show many times. The wage price spiral, employees demanding higher wages to offset inflation, the company granting those wage increases. Plus, it's costing them more to bring on new people. They have to match those salaries with the people already working there. So wages are continuing to rise. And so, again, the news is so mixed on what the direction is. I was reading today, now they're expecting first quarter GDP to be pretty negative. So we have 2 quarters negative in a row, the first 2 quarters of this year. We have 2 pretty good quarters, the third and fourth quarter of this year, both positive, leading to a positive GDP for the country for the year. Now they're talking right back down to negative GDP growth in the first quarter. You know, that leading to big recession number, fears. But here's the thing I was looking at, okay? So check it out. In December, I'm looking at earnings, because this is really the big driver, right? 67% of S&P companies that have reported earnings for the fourth quarter have beaten Wall Street expectations on their results. So more than 2/3 of companies reporting earnings are beating what Wall Street expects. So companies continuing to earn and do well. The long-term average of companies beating is just a little over 60%. So more companies than usual beating Wall Street expectations. So you got, you know, for the most part, you know, there's parts of the economy obviously having difficulties. You have real estate tanking completely. You have consumer spending now starting to slow down after a pretty robust year. Consumers debt-ridden, debt-laden, now starting to slow up on the borrowing. You got wages continuing to rise. Prices continuing to rise, but not at the pace they were rising. And some stuff actually coming down in prices, beef being one thing, and a lot of staples starting to come down in price. So it's just going to be, again, to see how all of this stuff actually turns out. We can make predictions here. We can look into the crystal ball. It's not exactly the object of what we're trying to do here. We're trying to present you guys with information that we know will likely move these markets, okay? And how it will move these markets so you know what to expect with your own investing. And when you look at your statements at the end of the month, if you're not really trading much and you're just kind of a buy and hold person, well, if you're watching this show, we're giving you a pretty good indication every month of what your statement's going to look like, not only this month, but going forward. Anyway, guys, next week's a huge week. We know we're going to get a rate increase next week. We're going to have all kind of data around that. Of course, more than the rate hike will be Powell's comments when he addresses the press on Wednesday. We're going to bring you guys all the details of that, put it all together, exactly how it'll affect you guys and affect this economy going forward. As always, we appreciate your support. It's going to be a great weekend coming up. It's Friday, my favorite day of the work week. And sadly, I won't be watching my Buffalo Bills play this weekend. We've got two big championship games. The winners meeting up in the Super Bowl. Get out of the work environment, get out of the finance, get out of the, engaging your mind on stuff that's not good and fun. Enjoy the weekend with your families and your friends. Relax. Spend some time gearing up for next week. It's going to be a big one. We'll be back on Monday, guys. Until then, take care. Thanks.